All right, welcome to The Explainer. Today, we're going to dive into the world of insurance, but we're going to do it by looking at how one Indian agency, Deepless Services, talks about it. We're going to see how they frame insurance as, not just a safety net, but also as a way to build your financial future.
So let's just start with this one big question, because it really gets to the core of everything. What if you could have a single financial tool that acts as a shield for your family and as a way to grow your money for the long haul? That's really the central promise we're going to unpack today.
Here's how we're going to break it down. First, we'll talk about the why, the basics of insurance. Then we'll get into the specifics, decoding a couple of actual policies. After that, we'll clear up a really common point of confusion, linked versus non-linked plans. Then we'll look at the role of an agent in all this. And finally, what happens after you buy a policy.
Okay, so before we get into any of the fancy products or plans, let's just start at square one. Why do people even get insurance? Let's look at the fundamental reasons presented in the material.
So why is insurance made out to be such a big deal? Well, it really boils down to four key things. First, it's about protecting you from those sudden, massive expenses, a medical emergency, an accident. That protection, well, it leads directly to the second point, plain old peace of mind. Then, of course, some of it is just the law, like you have to have motor insurance for your car. But the last one, that's maybe the biggest. For life insurance, it's a financial shield for your family if you're not around anymore.
And the agency deals with pretty much everything you can think of. Health, your home, your car, even travel. But for this explainer, we're really going to zero in on the life insurance side of things, because that's where you really start to see that promise of both protection and investment come together.
All right, time to get into the nitty-gritty. We're going to pull apart a couple of specific plans from the Life Insurance Corporation, or LIC, that this agency focuses on. This is where we see how all those ideas we just talked about actually work in the real world.
So, first up, we've got a policy called Jeevan Labh. Now, the name itself is a huge clue, right? It basically translates to life's profit. That tells you a lot about its goal right from the start. It's trying to combine that safety element with a savings one.
Let's peek under the hood here. Do you see? It's a non-linked endowment plan. Now, we're going to define non-linked properly in a bit, but for now, just know it means the returns aren't riding the roller coaster of the stock market. And notice that structure. It's kind of interesting. You only pay into it for a limited time, say 10 or 16 years, but the policy keeps growing and doesn't actually pay out until much later.
And this is the key. It's got this dual benefit. If the person with the policy passes away during the term, their family gets a payout. Simple. But if they survive the whole term, they get a lump sum of money. It's both a Plan A and a Plan B. Plus, you can take a loan against it, and, crucially, those returns are way more predictable because they aren't tied to the market's whim.
Okay, next up is Jivan Umang. Umang means something like enthusiasm or joy, and this policy is built completely differently. It's a whole life plan, meaning it's designed to cover you all the way up to age 100.
Now this is a totally different ballgame. It's a whole life policy, so it's in it for the long, long haul. But here's the really unique part. The annual survival benefits. Once you're done paying all your premiums, the policy actually starts paying you a certain amount every single year. It's almost like a mini pension, and that's on top of the big lump sum that's paid out either when you reach the end of the term or if you pass away.
Okay, so I've used that term non-linked a couple of times now. This brings us to a really, really important distinction that can be kind of confusing for people. So let's take a minute and make it super clear what the difference is between a non-linked plan and a unit-linked one.
This is probably one of the most important things to get. On the left, you've got your non-linked plans like Jeevan Labh. Think of this as the slow and steady, predictable route. Your money isn't directly exposed to the ups and downs of the stock market. On the right, you have unit-linked plans, or ULIPs. With these, your money is invested in funds that are tied to the market. So what does that mean? It means there's potential for much higher returns, but it also comes with higher risk. It's that classic trade-off, safety versus growth potential.
So, you've got all these different plans, all these terms. How on earth does a regular person make a choice? Well, that brings us to the human element in this whole process. The insurance agent.
The source material uses this quote to really frame the agent's job. And the idea here is that it's not just about selling something. It's presented more like a mission, to help people actually secure their financial future. It really positions the agent as a guide, not just a salesperson.
So what does that guidance actually look like? Well, a good agent is supposed to start by figuring out what you personally need. They help you cut through the noise and compare different plans. They can teach you a thing or two about financial planning in general. And, this is a big one, they're the person you call when you or your family actually need to use the policy and make a claim. They're your navigator.
All right, our final section. Because buying a policy isn't the end of the story, not at all. It's really the beginning of a long-term relationship. So this last part looks at the practical stuff, managing your policy over the years.
You know, life changes, right? And your financial tools have to be able to adapt. So the agency makes it clear that there are services for exactly that. Say you miss some payments and the policy lapses, you might need to revive it. You get married or have a kid, you need to update your nominee. You hit a rough patch, you might need to take out a loan against it. This all just shows that a policy isn't a set it and forget it kind of thing. It's a living tool that you manage as your life evolves.
So if we take a step back and look at the big picture, what's the main takeaway? The core message we're seeing from this material is that life insurance is being presented as this incredible two-for-one deal. It's a tool with two jobs. One, to be a financial safety net for the worst-case scenario, and two, to be a structured, disciplined way to save for the long term.
And that really brings us to the end. We've seen how these different plans try to blend security with savings and how you can choose between stability and the potential for higher growth, which leaves us with a final question to think about. Looking at all this, what role could a structured plan like one of these actually play in your own financial life? Thanks for joining us for this explainer.